Let's bring in Kevin Green, senior markets correspondent, to help set up the action today right away. All right, so we finished mixed yesterday, but Amazon set a new all-time high. Meantime, at the same time, you have futures indicating pressure this morning. And so far this earnings season, it seems like overall things are better than expected. Are investors kind of just regrouping right now?
Yeah, it does appear that we are seeing some profit taking within the market. We have seen obviously a weakness when it comes to breadth over the last week and a half or so, and it seems like the market's starting to catch up to that a little bit here when you're seeing the Mag 7 names, some of them selling off a tad bit. Nvidia is still trying to hold that $200 level in pre-market trading. That's going to be a key area for that stock, and that's also going to potentially hold up the market, at least for now. You continue to see Meta kind of failing to the downside here, trading at around $630 or so, but you did see a little bit of an expansion of breadth yesterday and later in this session. Now, financial stocks, if you're looking at Wells Fargo as well as Bank of America, did catch a little bit of a bid after selling off earlier in the session here. So I think you're seeing a little bit of a rotation. You are seeing credit markets maybe tightening up here a tad bit when it comes to the yields. Junk bonds have definitely seen a little bit of a sell-off here. Treasuries are catching a tad bit of a bid early on this morning. So I think this is just a little bit of a reset, hitting some key areas of resistance at around that 6,900 level for the S&P 500. Maybe we pull back, consolidate, and then try to move higher. Last night, we also did hit the 20-day moving average for the E-mini S&P 500. So that's why we are a little bit off the lows. I think there was some technical buying at that level as well.
Okay, all right. So let's get into some of the earnings that you're across. Palantir, it is under some pressure this morning. The report looks strong to me. I know there were some questions about valuations going into this, but that didn't stop investors all year. So what are some of your takeaways here, KG?
Yeah, I mean, it was actually a pretty decent report when you're looking at both top line and bottom line growth here. Revenue came in at $1.18 billion. Street was looking for $1.09 billion, and you're looking at revenue growth of around 63% on a year-over-year basis. Adjusted earnings per share came in at 21 cents. Street was looking for 17 cents, and free cash flow, their outlook actually did increase here moving forward, and their guidance actually looked pretty healthy. Now, obviously, the stock is actually very expensive when you're looking at the forward multiple at this point in time, but as you kind of talked about, the market hasn't really been paying that any mind here lately, and we'll see if we have a little bit of a sell the news type of an event here. They continue to see obviously outperformance when it comes to AI growth and demand. They talked about that on the conference call as well, and they are seeing an uptick when it comes to defense contracts. It seems like that's actually going to accelerate over the next couple of quarters, which should be a tailwind for them. So overall, it was actually a really decent report. It's an expensive stock. It ran up into the print as well. I mean, the stock was up around 3%, 3.6% going into the print yesterday, and so you are seeing that giving back just a tad bit here. I mean, we're down 7%, but this is a name that's really volatile as well. So a 7% move in the grand scheme of things for this type of stock is really not that much.
Okay, that's what one of the things I want to ask in terms of the volatility, because I'm not sure if you broke this, but if I remember right, there was a brief gain overnight in Palantir, but now under some pressure. So this was kind of par for the course in reaction, along with that valuation question.
Yeah, exactly. And the market was also looking for like around a 9%, 9.8% move to the upside or downside. So we're still within the market maker, move band, if you will. And so it looks like market makers were able to price this out pretty decently here. Once again, you saw a really good report. Analyst expectations obviously still fairly high on this name, and they are seeing organic growth. And if that's going to continue, maybe we see a little bit of a pullback. Obviously, the whole market itself looks like it's trying to consolidate, and this would probably be one of the stocks that would outperform here. If you start seeing outperformance, that's probably going to lead to maybe more speculation in the broader equity market as well, as this is really more of a risk-on trade when you're kind of looking at its performance compared to the S&P.
Okay, all right, and let's talk another earnings that you are across this morning. That's Pfizer. Those shares have been under pressure this morning off the back of its quarterly results. What are some of your takeaways here?
Well, it's down about 0.6% in pre-market trading here. And if you're looking at the report, it's actually pretty decent. So revenue came in at $16.65 billion. Street was looking for $16.58 billion. So they beat on top line. The adjusted earnings per share came in at 87 cents. Street was looking for 63 cents here. And they did see that revenue change of around down 6% on a year-over-year basis. COVID-19 sales obviously continues to drag on the company. They did actually reaffirm the revenue guidance for 2025. They did raise their EPS guidance for 2025 2025 slightly, and then also narrowed that range. Now they're looking at $3 to $3.15 there. And they are seeing some assumptions being made here. They're looking at the impact of China tariffs as well as Canadian and Mexico tariffs that are taking place as well. That's going to impact them. They also excluded their share repurchases, and then it looks like they are taking a one-time charge of $1.35 billion for R&D expenses. Now, they have created this deal or inked a deal with the White House to lower drug prices, and then also trying to reinvest here in the United States. That should also be a tailwind for them for some exceptions when it comes to tariffs, but not a really big move for this stock. They have to look at their product portfolio. What's going to be the next big thing for them? Because COVID-19 obviously is not the product offering that consumers want anymore. It seems like there's a lot more opportunities elsewhere, and it seems like Pfizer, as well as other manufacturers, when you're looking at the pharmaceutical space, are really trying to find that next big thing. GLP-1s obviously is a big thing. Pfizer has some exposure there. They're trying to purchase into that space. It seems like there's a little bit of a battle with Novo Nordisk right now. So a lot happening with this company, but not a bad report overall. Once again, you're seeing the stock down about maybe 0.6, 0.7% right now.
Okay. What does the market take its cues from today? Is it the batch of earnings?
It's still going to be earnings. I mean, we have AMD after the close, I believe, so that'll be a key driver for the market. We still have some Fed commentary that's going to hit the tape as well. We have a lack of economic data. We're not going to get jolts today. We will probably focus on the ADP report tomorrow, and we'll see what the price action really tells us. I think if you do lose that $200 level on NVIDIA, I think that's where you see a lot more heaviness when it comes to the S&P 500. But that does not mean that there's not opportunities out there, especially when you're looking at the value names. You're looking at a lot of stocks that have already been aggressively oversold here. Bottom feeding into year end is nothing that's out of the norm here, and I would expect that to be the same case this time around.
Okay, and then KG, your targets on the S&P 500 today, to the upside and downside.
Yeah, to the upside, 68.50. To the downside, 67.30. You're looking at around a 1.2% implied move, 1.25% implied move for the S&P 500. So we're expecting some volatility here. You would hope, if you're a bull, that volatility crushes and that leads equity markets a little bit higher. And then once again, keep your eye out on the high yield debt space. That's going to be your key signal, I think, that once you see some buyers really stepping into that industry, if you will, that probably will lead to equity gains moving higher.
All right, thank you, KG. That is our Kevin Green, Senior Markets Correspondent. Appreciate the setup for today.